Bitcoin has broken below the previous cycle's all-time high as it hits 9 straight days of relentless, steady, and methodical sell pressure. At the same time, nearly $5 trillion was wiped out across global markets in the last 24 hours, all without a single clear major catalyst. And when price breaks confidence like this in Bitcoin, the theories rush in. Suppression, exchange insolvency, regulation games, quantum threat, even linking Bitcoin to Jeffrey Epstein. Every explanation everywhere, all at once. So, the question isn't just why is Bitcoin down? It's what does this moment actually represent? Is this what capitulation feels like? Now let's get into it. The bloodbath continues as Bitcoin is now trading around $65,000, 48% below the all-time high set in October. We've broken below the previous cycle's all-time high from 2021. And the strange part is the selling hasn't looked as emotional as it has in the past. It hasn't looked like retail panic. It's been steady and methodical. Lower highs, lower lows day after day for 9 straight days. That's important because it tells you something about who's selling and how. But before we get to that, let's zoom out for a second. Because in the last 24 hours alone, nearly $5 trillion was wiped out across global markets. Following the massive liquidation event in gold and silver late last week, markets have been completely irrational. And what's most surprising is all of it happened without a single clean bad news headline to point to. This is what broad de-risking looks like. And it's what stress looks like. In short, this isn't Bitcoin breaking down in isolation. It looks more like markets repricing risk everywhere and all at once. Now, let's say the part that needs to be said. With this kind of relentless sell pressure continuing, Bitcoin can of course go lower from here. One level I'm watching closely is the 200-week moving average, which is fitting that it's sitting around $58,000. 58K became a meme during the 2021 cycle as rock-solid support. Historically, the 200-week moving average level has acted as a powerful bear market floor. It's a great rolling indicator for Bitcoin's rising value as it averages the price over a 4-year period which coincides with a 4-year supply halving. It's where long-term buyers tend to step in size. It's where forced sellers often finish. So could we go there? Yes, it's possible. Could we go even lower than that briefly? Also yes. Acknowledging that doesn't weaken conviction. Pretending downside can't happen is what breaks people when it does. One thing to keep in mind, Bitcoin has always tested resolve before rewarding patience. Before we move on, there's one thing that's worth grounding ourselves in. A lot of people see charts like this and hear terms like oversold and RSI, and it sounds technical and intimidating, and it doesn't need to be. RSI is just a measure of how intense the selling has become relative to buying. It doesn't tell you exactly where price goes next. It doesn't necessarily call a bottom. It just tells you how one-sided the market has become. And right now, Bitcoin's RSI is lower than it was during the COVID crash, and even lower than it was at the bottom of the FTX collapse in 2022. That means fear, forced selling, and liquidation pressure are at extreme levels. And historically, those conditions don't show up at the start of drawdowns. They show up much closer to exhaustion. And that's important context to have, especially before we start layering on narratives, because whenever price breaks confidence like this, the theories rush in. Veteran market trader Peter Brandt called this campaign selling in a post on X. What he means by campaign selling is methodical institutional selling, not retail capitulation. Many see this as being about regulation timing. Think intentional price suppression by large institutions and banks driving price lower. Before regulatory clarity arrives in the form of the Clarity Act being signed into law, which many expect will happen by the end of February. That thesis then says the narrative flips and shorts get wrecked on the way back up, enriching the insiders. There are rumors about exchanges being insolvent or on thin ice. Binance has come up a lot since the 2010 incident. Liquidity withdrawals, order books looking sketchy. Then there's persistent FUD like the quantum threat, whales selling, JP Morgan hit pieces, and even absurd stuff tying Bitcoin to Jeffrey Epstein. Even people saying Epst was Satoshi, which is absolutely ridiculous. Every angle, every day, no pause. Here's the key thing. Some of these theories could have some truth to them. Some of them, like the Epstein stuff, definitely a ridiculous FUD. And some of them might be a mix of both, but none of them change what Bitcoin is. And that's the grounding we all need right now. When markets get chaotic like this, something very predictable happens. People start looking to the federal. And if there is any one single neat narrative that started this unwind, it was Kevin Walsh being announced as the new Fed chair. This set a very different and unexpected tone. And markets begin to price in the idea that this time policymakers might be able to steer things differently. But that's the irrational mistake because regardless of who's in the chair, the constraints don't change. The debt doesn't disappear, the deficits don't shrink, the math doesn't reset. So while markets obsess over personalities and expectations, the system itself is boxed in. And this is where James' lavish framework is so useful, because it strips away the noise and shows you the actual choices on the table. This is how I might like to frame it now, is there's 4 doors and 3 of them have been locked, and there's just no other option but the 4th door. The austerity door locked. You're not going to get austerity. Neither party is going to cut expenses enough at the government level that it's going to make a difference. We tried with Doge. We're still at $2 trillion deficits. Okay, raising taxes it. First of all, it's not popular. Second of all, it's only popular with the people who want taxes on billionaires. You see what's happening in California and New York. The billionaires are leaving. They're literally going to Miami and Austin. They're leaving. They're coming here, Danny. The housing prices here are going up because we have a deluge of wealthy people coming in from California into Las Vegas. For people who don't know where I'm sitting, it's crazy. And the houses, just the nice houses go fast here. But anyways, so taxes don't really work, number 1, because they're not that popular. And number 2, if there's a productivity, it crests at a certain point of taxes where the amount that you'll bring in taxes on GDP levels out and peaks, because it starts hurting productivity. Why is that? Because companies who are taxed higher, small companies who are taxed higher individuals, they aren't reinvesting in productive lines of products in new products. They're not hiring people. They're paying taxes, and it goes to the government. It gets wasted. We've seen how much waste is in there. Minnesota, if the people who are not on Twitter and X and don't know what's going on in Minnesota, God help you. The fraud in that state it's crazy. The fraud in California is insane. They just waste money. It goes right into their pockets. It's the Cantillon effect at the political level. It's awful. And it's both parties, by the way. It's not just one party. So that's the 2nd door. The 3rd door, we could default. You could just default on your debt and reset it. That's not happening. You would never do that with a debt that's denominated in your own currency. You'll just print more money, which is door 4. And we keep doing it. We're doing it every day. Right now we're doing it in soft QE, where they're out there. They're buying T-bills in order to make sure that the bank reserves are high enough that it can meet the velocity of capital needed for this amount of GDP, which is about 10%. We're getting to that level. It's starting to make the Fed a little bit nervous. So they're out there buying T-bills now. Regular market processes, right? No, it's QE light. And eventually what the market is telling you is they're going to have to buy longer-dated treasuries. They're going to have to do Operation Twist, where they're out there buying longer-dated treasuries, and that's fooling QE. Not yet, but they will. Maybe it takes an event. Maybe it just takes a certain amount of interest of yield on the 10-year. They have no choice. I've got to get in there and start controlling it through yield curve control effectively by buying bonds and getting those rates lower. So yeah, Walsh, as he's known as a hawk. That's great, but he has no choice. What Lavish is laying out here isn't political. It's not partisan. It's math. Austerity will never happen. Taxes can't fix it. Default doesn't make sense when the debt is denominated in your own currency. So you print door 4 always wins. And Bitcoin exists because that door always wins. Now the hardest part of moments like this isn't price. It's the doubt that creeps in. The creeping feeling that maybe you're wrong. That maybe everyone else knows something that you don't. And that's why this next clip matters. I believe that what we are experiencing right now, Danny, is an information or a knowledge arbitrage. Yeah, and so people just do not yet understand how Bitcoin is different and why it is the ultimate store of value and the ultimate debasement asset. They just don't understand it yet. There's a lot of confusion there. The mainstream media puts out confusing and hit pieces about it all the time. They commingle it with all the other cryptocurrencies, and they just call them all the same thing. And so I have friends who say, oh yeah, I own that. I own Bitcoin. I own the Solana one. And they just don't get it. And it's okay. It's not their fault. They're just not interested in doing the research themselves, and they're listening to mainstream media and getting their news off of Facebook or their research off of Facebook. They're just not getting it. And so there is an information arbitrage that you and I are experiencing right now. It feels bad, and it makes you feel like, am I an idiot? Am I just stupid that how early am I here? And the answer is you're still pretty early, because I think that Bitcoin is going to trade above $1 million in early 2030s, 2032, 2033. I would be very surprised if we're not touching $1 million Bitcoin. That's me. That's my thesis. That's where I believe this thing is going. But I also believe that part of that is that arbitrage of that knowledge arbitrage will close. And as that does, you're going to have the Harvards and the Yales and the University of Texas and the CalPERS and the Texas teachers and the every pension and fire fund out there taking positions in Bitcoin as a core asset. And when they do that, that's when that knowledge begins to really spread, and people like, oh, so Bitcoin is different. Okay, the Bitcoin is different. It's not just this moonshot thing. It's digital gold. Okay, then I should probably own some. And funny enough is I think that's going to be a much healthier rise for Bitcoin in price and a much more stable rise. It's not going to be this massive volatile thing. It's going to be like people. Oh, I get it. Okay, I get it. Oh, okay. I understand now. I understand. I understand how it's different. And then we'll feel vindicated and we'll look like we're 143 years old when we're just in our 50s or in your case 30s. This right now is what a knowledge arbitrage feels like in real time. A knowledge arbitrage means the price is moving before the understanding has caught up. It means some people are looking at Bitcoin through the lens of money, history, incentives, and math, while most people simply aren't. Most people still see Bitcoin as a trade, a tech stock, a fad, a speculative asset, or just another dumb crypto thing. They're not asking what fundamental problem it fixes. They're not looking at it through a lens of monetary history. They're not thinking about debt, debasement, or broken incentives. So when price drops, they don't have a framework to lean on. They just feel fear or revulsion. And that's why this phase feels isolating. Because when you don't understand what Bitcoin is, drawdowns like this don't feel like failure. They feel like friction. They feel like the gap between price discovery and understanding being worked out. Understanding always lags price. And it lags the most when price is falling. At tops, everyone thinks they understand Bitcoin. At bottoms, almost no one does. That's not an accident. That's how monetization works for something that's genuinely new. And if this feels uncomfortable, if it feels lonely, if it feels like you're early, that's not a sign you're wrong. It's a sign you're ahead of the curve. And this is where James Check adds something important, because Bitcoin's strength isn't just in math and superior monetary properties. It's in people. There's two things that keep me bullish no matter what's going on. One, it's a 10x more than a 10x improvement over its predecessor. And history shows that technology as it evolves, and we hit to those 10x multiples, it takes over. And the second thing is look at the quality of people who are Bitcoiners. Look at the diversity of their backgrounds. I'm a tunnel engineer. There's people who are doctors. There's people come from all these fascinating, interesting backgrounds. Energy traders, all sorts of things. And they've all converged on the same thing being Bitcoin's the best thing since sliced bread. You're telling me that all of these smart INEJ engineer types are just they're all dumb and idiots. No, the most bullish thing about Bitcoin is the people who get attracted to it. And I'm not betting against those people because the other cool thing about this, so many Bitcoiners, in fact, I would almost argue most if not all, we kind of came up and grew up in an era where the world hated Bitcoin. It's every headline was negative. Every government didn't like it. It's getting banned. And it's going to shut down. It's going to, and yet we still formed enough conviction to be no way. I'm putting my whole life savings in this thing. So yeah, we all formed a consensus that this thing kicks ass independently whilst the government, the media, our friends, our weird uncle, everyone was telling us that we were dead wrong, and we stuck to our guns. I'm sorry, I'm not betting against those people. They get it. Bitcoin attracts long-term thinkers across all industries and skill sets. People who formed conviction while the world hated it, while governments banned it, while headlines mocked it. That's not accidental. That's selection. Like many of you, I bought Bitcoin all the way up during the last bull market in 2021, even buying the very top of 69,000. And I rode it all the way down to 17,000 following the FTX collapse in 2022. That wasn't fun. It wasn't obvious, and it didn't feel smart at the time. But that's where long-term conviction was forged. Riding this thing to the ups and the downs is a kind of rite of passage in Bitcoin. And I believe we'll look back at February 2026 the same way, like the CO crash, like FTX, only obvious in hindsight. And when opportunities like this show up in Bitcoin, it's where a disciplined dollar-cost average approach makes the most sense. Not trying to catch the exact bottom, not reacting to every headline, just consistently converting excess capital into Bitcoin over time. And it's also where self-custody matters. Because if this is something you plan to hold for decades, it can't live on an exchange. It has to be secured properly and planned for the long term. Exactly what Swan Private focuses on. At Swan Private, we help families, individuals, and businesses accumulate Bitcoin deliberately, hold it securely, and structure it for the long run. From custody and inheritance to balance sheet strategy, no trading, no leverage, no noise, just a serious long-term approach to holding the world's best money for people who understand what they're holding and why. As we mentioned earlier, there's been a lot of extreme FUD floating around. Some of it goes way too far. But the reason some of it is landing right now has less to do with Bitcoin and more to do with what people are being forced to confront about the world they live in. The recent release of the Epstein files pulled back a curtain most people never want to look behind. A glimpse into the corruption, abuse of power, and moral rot operating at levels far above everyday life. For a lot of people, that kind of exposure is destabilizing. It shakes trust and it disrupts social identity. It forces you to ask uncomfortable questions about who the system actually serves. The fiat monetary system we live under doesn't just manage money. It enables power. It concentrates control. It rewards corrupt insiders. And it allows value to be extracted quietly over time from everyone else. This isn't a conspiracy. That's how centralized monetary systems have always worked. Bitcoin is an escape from that. Not a cure-all, not a moral crusade, but a way to opt out of a system where money itself can be bent, censored, and manipulated behind closed doors. Bitcoin is neutral. It's an honest ledger, a just weight. Honest money doesn't fix human evil, but it limits how much damage can be done at scale. And that's why Bitcoin exists. Not to promise a perfect world, but to give people a way out of a system that quietly rewards corruption while demanding your trust. But I want to hear what you think. What narrative do you think is driving the drawdowns most right now? And what helped you hold conviction during your first Bitcoin bear market? Drop your thoughts in the comments below. If you made it this far, please like this video and think of sharing it with someone who needs it.